Hi Narendra.
Yes, Sudhir, how are you?
Good, thank you. How are you?
Good, good, good.
Yeah, so let's just give it a couple of minutes for everyone to join.
Yeah, sure.
Okay, so I think people are joining. Okay, so we'll just slowly get started. So let others join. Hi everyone. Today is our second session for this year. Um, Let me just forward these invites to our WhatsApp groups. Okay, so today is our second session of this year, and last week we had our session on Canadian resume do and don'ts, and today we thought like okay, it's a very good time for discussing about taxation. So today we'll be discussing about the taxation in Canada. Again, it's not a basic level, but we will try to cover as much as possible in a 1 hour session. So my name is Sudhir, and I work as an agile consultant in one of the banks here in Canada, and I've been doing these kinds of session for past 3 to 4 years now, and every session I invite some experts in their field to give the insights about what is happening in the market and about the area of where they are expert in. So I invite recruiters, I invite tax consultant, mortgage brokers, real estate agents, stock day traders, everyone, and we have been having these sessions for like 4 years now. So last year we had around 30 sessions. So we take a small break in summer, but rest of the time we have these sessions once a week or once in 2 weeks. And whatever we are discussing today, it's getting recorded and it's been telecasted live in YouTube. And other thing is, all these are our personal opinions. It is nothing related. So everyone's case will be totally different. So this is just a education session. So try to learn or try to just keep this as an education session, and do not share any personal details in this public forum. This is a public forum with more than 100 people attending, so try not to share any personal things, but you can definitely ask question. So today I have invited Narendra. So Narendra is one of the tax consultants here in Canada. He have been helping me with all my taxes for the past 4 years. I have been doing some contracting. So 4 years back, I met Narendra, and from that day onwards, he have been helping me plan all my taxes, my mortgages, my financial plans, and everything. So he's a mortgage broker. He runs a He's a financial planner also, and he have been dealing with all my financial for the past 4 years. So I meet with him on a monthly basis, mostly monthly basis, to discuss what is happening with my financials or how should I plan it. That by that way we are able to plan our financials and taxes in advance. So one thing I learned before I go to Narendra is that I made a lot of mistakes. I thought that okay, it's simple by reading just some data or articles in the websites, and literally I had to pay a lot of penalty. It was like $600 I paid as a penalty by for the mistakes which I had already committed. So after going to Narendra, he has helped me in understanding all these tax processes and all, especially from the contracting side. And that is one of the reasons I've been sticking with him for past 4 plus years. So today in our session, we are going to ask him the basics of our personal taxes plus contracting, but we have a hard stop by 8:30, and this is going to be a Q&A session. So whoever wants to ask questions, please feel free to raise your hand and come to the speaker panel, ask the question. But I will, before that, thank you, Narendra, for accepting my invitation and spending some time to help me with all these taxes
No problem,
sessions.
Sudhir. Anytime for you.
Thank you, Narendra. So let us start. Narendra, can you just give a quick introduction, and after that, I'll start my first question.
Yeah, sure. So, hi everybody. I'm Narendra here. Basically, I'm a chartered accountant from India, and in Canada, I have done. I'm doing practice as certified financial planner, and also I am also chartered investment manager. So I'm helping my clients in their tax planning, they're planning for their buying their first home, then the retirement planning, then planning for kids education. So basically those are the areas that I handle for my clients, and also clients who are having small businesses, like most of you guys may be having IT consulting, where you might be incorporated yourself. So then I have other clients also, like pharmacies, restaurants, and all those things. But yeah, my primary focus is to help clients in their financial planning, retirement planning, taxes, and answering their day-to-day questions wherever this gets stuck, helping them in planning for their first home or planning in the investment properties. And also because I am also doing mortgages, so I understand the things which you need to know from the planning angle to the investment planning angle, and also the investment angle. So that's how I my specializations are, and that's what I do for my all my clients. And Sudhir asked me to help his colleagues and friends to understand the basics of Canadian taxation, also especially people who are new to Canada and they're struggling how things works in Canada. So let me start with the basics. So basically, in Canada, you have two tax. There is a federal tax and there is also provincial tax. Federal tax, basically it starts from 15% and it goes up to 33%. And people who are in Ontario, for them tax starts from 5.05 and it goes up to 13%. So basically, you can say that if you somebody is earning around $50,000, they might be paying around 24.15. And in Canada, tax system is marginal tax. That as your income grows, you are taxed on the next bracket. So say your first 50,000, you might be taxed on at 24%. And say your income goes from 50,000 to 80,000, so on that 30,000 extra you will be charged 5% extra. That is first 50,000 24 and balance 30,000 29. Some approximately. And people who are over making over 200,000 $220,000, they are charged at highest tax rates of approximately 50%. This is the first thing. Then there are some other important thing that I would like to explain to you. So people, most of you are IT guys, I am assuming that. So like previous years, you will again can claim five, if people who are especially who are working as an employee, they can claim 500 as a work from home expense. Again this year, last year you might have claimed that. Then other thing is that from the saving side, there are two types of tools that are available to people who are basically working as an employee or even who have a corporation. So the one is called tax-free saving account, where every year government adds up approximately $6,500. So I'll explain you a little bit about tax free before I go to the other things. So tax free saving account is an account where when you open the account, there are no deductions that are allowed in your taxation. But this is a very wonderful, very beautiful tool for you to accumulate your wealth on tax free basis, because when you're investing, you're not getting tax deduction, but the funds are whatever investment you will do under TFSA. You can buy mutual funds, you can buy stocks, whatever you want to buy, ETFs. The growth is tax free, so there is no tax when the money that is growing inside the tax free saving account. Second, lot of people, I mean, most of you might have heard, is called registered retirement saving plan. So, registered retirement saving plan is basically whenever you contribute any amount to RRSP, you get a tax deduction, and the money grows on tax free basis. But there is a limit every year that CRA will show you on your notice of assessment. Every year they increase the limit, that is 18% of your income. That is the limit that you can contribute maximum. But say if you have not contributed in past years, you can always catch up with those things. So, say last previous year your limit was 15,000. This year you added up another 15,000, so anytime you can contribute 30,000. Now, the biggest drawback of RRSP is that you are getting tax deduction, no doubt, it's very good. Money is growing tax free, that is also very good. But a lot of people end up doing biggest mistake is that they contribute too much to RRSP because they think that okay, we are investing the money in RRSP, the money is growing tax free, we are getting tax deduction. But what happens at age 71? Whatever money you have accumulated in your RRSP account, now government wants their portion of taxes. So they want you to start withdrawing that money from your RRSP account. So they expect you to withdraw in next 15 years, that is from 71 to 86. And every year you have to withdraw with the set formula by CRA. That is Canada Revenue Agency. So every year, say first year, you have to withdraw approximately 7.2% of the funds that you have accumulated. Second year it's 7.1 or something, and then it goes down like this. So what happens at retirement? Again, you are sitting on the higher tax bracket because you have contributed too much to your RRSP account. That's why when I said about TFSA, it's a wonderful tool because here, whatever money is there, there is no compulsion for you to withdraw. This money you have contributed from your tax paid money, so there is no taxes whenever you will withdraw, and you can pass on this money to your kids again on tax free basis. So this is the basic thing difference between the TFS and RRSP. Now government is again coming up another tool which is called first home saving account. This is going to be opened in somewhere in April 2023. So basically, the purpose of this account is that you can contribute like RRSP in this account, and again you will get tax deduction. You can contribute maximum of 40,000. Per year limit is 8,000. You cannot contribute more than that in a year. Over $8,000. So basically, it helps people who are planning to buy home to accumulate some funds. They can get tax deduction, and at the time of buying their first home, they can withdraw this money. Now, similar plan is there under the RRSP also, which is called home buyers plan. The basic difference between these two is that under home buyers plan, you have to whatever money you withdraw for buying your first home, you have to put that money back in next 15 years. But when it comes to the first home saving account, you don't have to put that money back. So that is the basic difference between these two. So between these two accounts, you can accumulate approximately $75,000 on tax-free basis, which you can use for your down payment and buying first home. So other thing, basically, you might have noticed in your pay stubs that your CPP contribution has increased. Last year it was 5.7% contribution. This year it has gone up to 5.95% to the maximum of, I believe it's $3,499, something like that. So till 3,499, the company will deduct your CPP, and after that they will stop deducting it. Same thing applies to the self-employed people who are withdrawing salary. So for first 66,600, you have to contribute to CPP, and after that you don't have to. Then other thing, uh,
Narendra, just asking a question. So,
yeah,
what is the
sure.
benefit of CPP?
Basically it's a Canada pension plan. So you can start taking that money either at age 60, or the normal age is 65, or you can drag it up to age 72. So the basic difference between these three ages is that if you are with, say, if you start withdrawing money from CPP at age 60, there will be 0.6% per month reduction of your normal amount. So normal amount starts at age 65. So for 5 year 0.6%, that is around 36%, you will receive less money as a pension. Whatever you have contributed, so you will receive less 36% if you start withdrawing at age 60. At 65, you get normal. If you drag it till age 72, the way it has reduced 0.6% every month when you are withdrawing at 60, same way it goes up by 0.6% every month if you start withdrawing at age 72. So basically, whatever you are contributing to your Canada pension plan, it accumulates, and then government of Canada gives you pension out of this money. So this is also important, especially people who are in subcontracting, to save taxes, because people are looking on day to day basis or year to year. What I always suggest people, look from a long term angle, because you are here in Canada, you are going to stay here at least till the time you retire. If some people wants to go back after they retire or whatever, but still, if you are not contributing to your CPP, don't expect anything. Means you will receive something from government, but don't expect a normal pension that normal Canadian will receive. So, especially people in contracting, they should look into this thing. Don't always, get intrigued with the dividends. That if we take dividend, there is no CPP, blah blah blah. It's good. Yeah, it's good. You are paying less taxes, but you're compromising on your retirement at the end of the day.
Okay, Narendra, I think we have. So right now, we can take up some questions. So
Yeah, sure.
anybody has any questions, please raise a hand, and I'll allow you to come to the speaker panel, and from there you can ask the question. Okay. Now Surjit is here. Surjit.
Hi Sudhir, hi Narendra, good evening. So my quick question is with regards to RRSP. Now I think RRSP, as you mentioned, Mr. Narendra, is 18% of your previous year, I think the
18%.
total salary. Sorry?
18%.
Yeah, 18%. That's right. But a first timer, like who has just come in Canada, say suppose in the mid of last year, say August of last year. Now, how and he has worked for some time in some months. How will he come to know that how much he can contribute to RRSP in 2023 without facing any penalty from CRA?
So when you will file your tax return, that time CRA will, most of the time, your the person who is filing tax for you, he will let you know that this is your RRSP limit. And say in case, because a lot of people are busy during tax time, accountants, they may not be able to give you personal advice. But once you will receive your notice of assessment, CRA will let you know in your notice of assessment that how much you can contribute to your RRSP.
Okay, thank you, Mr. Narendra. Thank you.
No problem, sir.
Okay, Yuvraj. Any questions?
Yes. Hi.
Yes, sir.
First of all, thanks for the session. My question to Narendra. You mentioned about a you know tax-free savings accounts, right? The money that you can earn from the tax-free savings account will be tax-free. My question is, say for an example, you invest $5,000 in the tax-free savings account. You get a 10% as a return, which comes up to what, $5,500. Can I use that $5,500 and then reinvest it? Will that?
Yeah, see, there is a limit. Every year, CRA adds up 6,005, approximately 6,000 to 6,500 limit
Yes,
to your RTFSA for your TFSA account. So
that's right.
people who are here for 5, 6 years, 7, 8 years, right now the maxi amount is 81,500. So say, to answer your question, you contributed $5,000, you made $6,000 on that. You can reinvest in TFSA as long as you have that limit.
Yes, my actual question is, apart from this limit, $6,000. Say I have a maximum of $6,000. I invest $6,000. I get something out of it, right? I get a loss or a profit, some
Right,
capital gains or a capital losses. Say if
right,
I gained it, I
right.
gained it within a month or so. Can I use that gain plus the principal to reinvest again? And then if
Again,
I get a profit
again,
on
you
that,
are in TFSA account.
yeah.
In TFSA account, see, say you contributed 5,000. Say,
Mhm.
say you contributed 6,500.
Okay.
Okay, let's assume your limit is 6,500.
Hmm.
You made $1,000 on that.
Yeah.
Okay. Now, this there is means nobody is restricting you to keep that money 7,500 in the account. Okay, because that $1,000 is you have earned out of your investment. Now, if you withdraw that money 7,500 and you want to put it back, then you can put it back only 6,500. You cannot go 7,500 back.
Yes. Yeah. Okay.
Means
Understood.
you cannot put more than your limit.
Yeah, 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 I understood that. I'm just curious to know whether I can reinvest the same with the profits. But yeah, makes sense. Okay.
Yeah.
Okay, thank you. Abhishek, Ramjot, any
Hi,
questions?
yeah,
Yeah,
Hello, hi, Abhishek here.
yeah,
yeah,
Um,
Abhishek.
Abhishek, go
yeah,
ahead.
hi Narendra.
I will be after.
Okay, so I have some questions. The first question is that, like, what happens in the case when you return back after 5 or 10 years? You don't want to be here after like 40 or 45. You just want to go back after 5, 6 years. What will happen to your RSP account, TFSA account, and you don't want to come back? Then what will happen?
See, as I told you, TFSA account anyway you can withdraw that money on tax-free basis. No issue.
Mm-hmm.
RRSP, if you want to keep it, means if you don't want to come back, obviously you have to inform CRA that you're emigrating from the country and you don't want to come back. So as far as RRSP is concerned, so as you know, when you contribute to your RRSP, you got tax deductions.
No,
Now
one
you want
minute,
to
one
withdraw
minute,
that money. When you will
one
withdraw
minute.
that money,
So
you have to pay tax on that.
So what is happening right now that my firm doesn't give me RSP. So my question is related to this. Should I go to a bank and open an RSP account?
Yeah, you can open RRSP account anywhere.
Okay. Does it
So,
impact like when you are opening from outside, or should I talk to my HR from my firm that they should
No,
open my
no,
account?
no, 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 no.
Okay.
You can go to contact any financial and you can come. Means I can also help you in opening that. You can go to bank. You can open there. There is no
Okay.
restriction. You can open your RSP account anywhere.
Okay. Okay. My point was that what would be implications when I leave this country after 5 years or 10 years, because I don't want to be here after 5 or 10
So
years.
you see, when you will contribute, you will get tax deduction.
Okay.
After 5 years, when you will take that money out, you have to pay taxes on that.
Okay. Okay. Got it. Thank you. Thanks for your answer.
Yeah, yeah.
thank you. So, before we go to Harabjot, I made a few mistakes when I came here. So I didn't invest in RRSP initially, where my company was contributing it. I missed all those things, and because of which I lost all the contribution which was given by the company. So this is just my 2 cents. I'm not a professional expert, but in case your company is contributing to your RRSP or GRSP or whatever the form is, it would be better in case you can start the RRSP when you are working in the company. Okay, that is one of the mistakes, which big mistakes which I made. Second thing is, you can actually take money from this RRSP account. Narendra will explain when you are purchasing the home. So if you are a newcomer, that is also something which I missed, but I somehow fixed it at the last moment. uh, RRSP, you can contribute to RRSP and take some money out of it to put the down payment for purchasing the house. So just these are a couple of mistakes which I made, which I the reason I'm explaining is you shouldn't be making those mistakes. Okay, so that's my just 2 cents.
But what if the company is not giving you RSP amount? Then again,
Yeah,
I will have to contribute, right?
that is correct.
Yes, see, not all the companies have RRSP plans. So
Okay.
that should not stop you from opening your own RRSP account.
Okay.
Okay, it's
Okay.
all Canadians can open their RRSP account. If your country company is not contributing, then you open your own account.
Okay. And if I change the company and second company starts giving, then
Then
obviously that.
you can keep that account. See, most of the companies they contribute up to 4% of your salary,
Okay.
right? So
Yeah.
you will be contributing 4%, and company will match 4%. Sometimes companies do little bit more, but most of the time it's approximately 4% give and take. So
Hmm.
say you are making $100,000. So 8% you have already did. You already did. Company did 4%. You did 4%. You still have limit of another. As I told you, 18% limit is generated every year. So you still have 10,000 scope of 10,000 contributing additional $10,000. So that you can open a self-directed or RSP account. Either you
So,
go to bank or you go to a financial advisor, they will help you to open.
so Narendra, what I understand from your overall conversation till now that everyone should open RSP, they should have TFSA account, and they should also have first home buyer plan account. Because if you are planning to have a house after 1 or 2 years, you should be having these accounts, right? That will help.
Yeah, that's how you will start. See where, okay, so every individual is sitting in a different situation, right?
Yeah,
People
correct,
who have
correct.
already bought a house, they may not want to contribute lot of money into RRSP. For them, they first want to fulfill their TFSA account. They may want to do RRSP because they want to save some taxes. The people who are new to Canada, who are planning to buy a house in couple of years, they should definitely do take benefit of RRSP,
Got
because
it.
what will happen that only two areas are there when CRA will not charge. You don't have to pay taxes if you're withdrawing from RRSP. So let me explain to you properly. So say you contributed $10,000. You are in 100,000 tax brackets. You will save approximately 30% of that in taxes. So you got refund of $3,000. Okay. Now, if you want to withdraw this money in any other situation except the two situation which I am telling you, say at that time you are making $150,000 and you withdraw $10,000 from your RRSP account. Now, when you are sitting at 150,000 bracket, your tax rate is 44%. So that means when you will withdraw that $10,000, you may end up paying $4,400 on taxes on that. Instead of when you contributed, you saved 3,000. Say different scenario, you lost a job and you withdraw money, and that time your tax bracket is say 50,000. Now at that time you tax deduction will be you will have to pay around 24%. So 2,400 you have to pay. Now there are only two scenarios where also when your in the retirement, again, when you are withdrawing this money, that is taxable, because entire life you have contributed, you got tax deduction, accumulation tax free. Now government wants their share, so when at retirement, when you start taking that money out, it's again taxable. Only two areas are there where you don't have to pay taxes. One is when you're buying a first time home. So you can withdraw up to $35,000. $35,000 you, $35,000 your wife can withdraw without any tax implication. So you contributed $20,000, you got $6,000 refund. Now you want to take that money out for your buying your first home, you take it out. Government is not going to ask you to pay that $6,000 back, because you're using this money for buying your first home. Now the only condition is that the whole idea of RRSP is that you contribute to fund your retirement. So that is the basic concept of RRSP. So that means the money that you took out when you're buying your first home, see, government wants you to put that money back into your RRSP, because that was the whole idea, that you're saving this for your retirement. They don't want you to pay immediately, but they want you to pay in next 15 years. So say you withdraw money in 2023, you start putting that money back from 2025 in 15 installment. The year you forget to put that money back, that will be added into your income. So say every year you have to put back say $1,000. One year you forget to put the money in RRSP $1,000. So that time that $1,000 will be added into your income, and it will be taxed at whatever tax bracket you're sitting at that time.
Okay, so 1 minute again. So what is the difference between then Canada pension plan and RRSP? I'm again confused
Canada,
myself.
no, both are different. Canada pension plan is when you are taking a salary, your employer is contributing in 2023, employer is contributing 5.95% of your salary. You are contributing 5.95% of your salary. It goes to your pension plan. So when you retire at age 60 or 65, the means you have to apply to Government of Canada to to take the money from that pension, the money that you have accumulated inside your pension plan. So that is different. Canada pension plan is different. RRSP is what you initiate the process yourself. Nobody is asking you to do that.
So
You
basically,
are
Abhishek,
initiating yourself.
yeah, basically, Abhishek, Canada pension plan is run by government of Canada, where employer is mandated to put a percentage of your salary to your pension. RRSP is totally your choice. If you want, you can put it. If you put it, you will get tax deduction. That's it.
But what if my plan is not to stay here? If I leave this
Yeah,
country
then
after
better
age
not to
60?
put in RRSP.
Okay.
Okay, because when you withdraw it, it will be taxable. Because I came from US. Okay, I have my RRSP equivalent there in US. If I try to withdraw it, they are charging me 30 percentage of the tax. Sorry, 30 percentage as tax. So there is no way by which I can withdraw it now. But yeah, I can withdraw it. There are a lot of things, but yeah, if you are going back to India or your home country, uh, Canada will, the government will hold the tax before they release them out. Okay, so let's go to Haramjot. Haramjot,
Yeah, hi. Thanks for arranging this event. I have a quick questions for you. The first question is, like you said, TFSA room, like per year there is a 6,000 approximately. So suppose for the first year I'm not putting any money in that. Second year I didn't. Third year I plan of doing. So can I do 18,000 in one go, or it will
Yes,
be
you
six?
can. Yeah, you can
Okay.
do 18,000 in one go.
Okay. My second question is, you said like, if I'm planning to buy a house or something, and if we buy a house and we get a mortgage and something, is there any rebate on personal taxes while doing that? Like if I have a mortgage and I'm paying interest to the bank from my
No,
personal.
only thing that you get when you buy your first home is first time home buyers tax credit,
Okay.
which is a maximum is $10,000 between both the spouses. So tax credit is 10,000 times 15%. So $1,500 will be your tax rebate, that means your tax will reduce, or you will get refund of $1,500 when you're buying your first home. That is the only thing, nothing else.
So that 1500 credit will be when we will be doing the
When you're
uh,
filing your tax return,
okay.
so you
Okay.
have to let your accountant know that you
Okay.
bought your home. Now this year, now we are filing for 2022.
Yeah,
So say next year you buy a house in 2023.
got it.
So when you're filing your tax return for 2023,
Hmm.
you have to let your accountant that you bought your first home and you want to
Okay.
get your first time home buyer's tax credit.
Okay. And when we buy, when we pay the property taxes for the city, like property taxes, like is there any debate on that as well?
No, no,
Okay.
So Narendra, I think Haramjot is asking like in India 1.5 lakh ATC is there, right?
no, no, no,
On
no,
interest.
no,
Yeah,
Yeah,
kind of. Yeah.
yeah, there is
And
nothing like that.
no,
and
no.
okay, and my and last question is like if I have a corporation, and is it like you mentioned about dividend, like is it good to have your salary or dividend, or like some proportion should be there so that you can save tax, like
Haramjot will come to that. Okay,
okay.
it's a long topic. We'll come to that.
Okay, thank you.
Yeah, so let's move on to Jay.
Yeah. So my question is, if I'm a student, can I get a deduction on student fees as well?
So for students, whatever fees you are paying to your university, every year you get a form from tax form from your university, which is called, I think, T2202A something. So when you're filing your tax return, give that tax form to your accountant so that he can put that information in your tax return. So this will be accumulated in your uh, as a credit in your account. When you start, say after 3 years, you start a new job and you start getting paid. So that time you will get approximately 15% of this credit, whatever tuition fees you have paid. But most important is that you should give this information to your accountant who is filing your taxes, so that CRA knows that it's means you have paid this tuition fee.
Okay, thank you, Narendra. Jay, you have to unmute.
Oh, all right. Thank you.
Thank you. Let's move on to Sajid.
Yeah, thank you, Sudhir and Narendra. So I have a few questions. One is like, Narendra, you mentioned like from the RRSP, we can take 35,000 self and 35,000 from the spousal RRSP, right? So I started, investing in RRSP last year, and my room was around 40,000, say for example. So I put 20,000 self and 20,000 spousal RRSP. And this year, say for example, 20,000, I'm planning to put 10,000 self and 10,000 the spousal RRSP. So altogether 60,000. And if I'm buying a house for this year, uh, uh, is it possible for me to withdraw all the 60,000 for the first home buyer plan
See,
mode?
the money that you are putting in your RRSP, it has to stay there for at least 90 days.
Yep.
If that money is there for 90 days, you can withdraw that money.
One thing is like, my wife is not working, so I'm contributing the RRSP from my room to her.
Right.
So yeah. So if I'm buying a house and from my account, there is no problem. Like, after 90 days, I can take whatever the contribution in my room. But is it the same case applicable for my wife?
Yes,
Well,
yes, yes, yes. The only thing is condition is that money should stay there for 90 days.
why I am asking this question, like, I heard it from somewhere. If I'm taking that money from the spousal RSP, if she is not working, that is contributed. It means like, that money will come back to the contributor, and he need to pay tax on that particular year. Is that not the case?
See, the spousal contribution is little tricky area. So basically, when if you withdraw this money from your spousal within 3 years, it's considered as your withdrawal. After
Oh,
third year is considered as your wife's withdrawal.
Okay. So within 3 years, if I'm withdrawing, even for the first home buyer, that money will come to my account as a
Yeah, yeah,
contributor.
yeah. It
Then I
will be
have to pay the tax.
considered as your. It will be considered as your withdrawal.
So it won't like considered as like first home
What
buyer.
I would recommend that wait till April.
Yep.
As I told you, new account is coming up. First home saving account.
Yep.
So at that time you contribute 8,000 and you can give money to your wife to contribute 8,000 for herself,
Even though if she is not working.
even though she is not working. So that way you will obviously she
Sorry,
will,
sorry to interrupt. Sorry to interrupt
but
on
there
this
is no
particular.
spousal contribution there.
Yeah, so sorry to interrupt on this. See, this is a personal case. The reason I'm saying
Yeah,
is, if your wife is not working, she might not have RRSP contribution
room.
room.
Yeah,
Okay, so you may want to take it offline. Okay, because
Okay. Okay. Okay.
you
Okay,
already
Sudhir. Yeah.
shared some personal confidential details in this group.
No, no. I just example only. Yeah. Yeah.
Yeah,
Not
yeah.
for like.
Example, it's okay. Okay, so
Yeah.
I
Yeah.
thought, okay,
No.
do
No.
not,
No. 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 No.
guys,
No. No.
this is a public forum. Do
Okay.
not share
I.
confidential financial details here.
yeah, no,
Yeah.
yeah.
Yeah. Yeah.
Please stay away from the personal
Yeah,
information.
yeah, I didn't share anything personal things. Yeah, yeah, I
Oh,
just
okay.
a case only. Yeah. So one more thing, like Narendra. So you mentioned like we can use the TFSA and buy some mutual funds, shares, or what it may be, and whatever the gain, like we can take it, and when we are putting back, like whatever the room you have, you can put it back.
Yeah,
Say
yeah.
for say for example, like we invested something in the shares, and the shares are not performing good, and we lost something in the capital. Is it something like we can while filing the tax, like we'll
No,
get any relaxation, something
no, no,
capital
not
loss?
not not from TFSA. If you open your own account, then own investment account, then yes, but not from TFSA.
Oh, okay, okay. Yep. Thank you. These two questions. I'm good. Yeah.
Thank you,
Thank you,
Sadiq.
Sudhir.
Okay,
Yep.
Vincent.
Hi, good evening, everyone. Good evening, Mr. Narendra. So my question is, for people who came to Canada mid of 2020 and were yet to file their taxes, I mean, can we open an RRSP account separately? And if yes, what will be our RRSP room? This is my first question.
No.
And yeah,
Okay, let me answer one by one.
sure,
So
sure.
answer is same. I think one gentleman already asked this question. When you will file your return,
Mm-hmm.
most of the time your accountant should be able to tell you, but because of busy tax time, they may not be able. They don't give you that answer.
Mm-hmm.
From CRA, you will receive a notice of assessment.
Okay.
So in that notice of assessment, it will be mentioned that what is your limit.
Okay. So before that, if I were
At
to
that
open,
time, you open the RRSP account.
okay. So before that, before filing my taxes, if I were to open an RRSP account in
See,
a private,
if you have, if you, see, basically, you know that how much you have made, right? So
exactly, yeah.
18% of that will be approximate your RRSP limit.
Okay. Okay.
But you open that means you will not be able to get benefit in year 2022. So
From
better you open now, but take benefit in when you are filing your tax return for 2023.
okay. Okay.
Because over contribution, if you are over contributing in RRSP for more
Mhm.
than $2,000, then your limit, there is a 1% interest penalty for every month that money is sitting there.
Okay.
So don't rush, just wait. It's
Sure.
almost tax season.
Almost tax. Yeah. Yeah. I mean,
Tax
for
season is going to
yeah.
start from 25th of February.
Sure.
Just file your return, know what is your limit, and
And
start
then
and
start.
open the account.
Okay. And my second question is, uh, you spoke about the home savings account, first-time home savings account. In a scenario where we were in need to withdraw the money for purposes other than home buying, can we do that? Can we withdraw the money from the first-time home savings
Then
account?
it will be taxed.
Taxable. Okay.
Yeah.
But we can do it, right?
You can, it's your money.
Exactly. Okay.
It's your money. Nobody is stopping you to withdraw
Okay.
your money.
Well, since it's named first-time home buyers
No, no,
account,
it's your money. You do whatever. But only thing is you are withdrawing it except for the reason of first home,
it will
then
be
it will be
taxed.
taxable.
Thank you. Thank you, sir.
Thank you, Vincent. Valentine.
Hi everyone. So I had a question. I work as a self-employed person. So I've been using dividends as income, but what if I want to move to salaried uh, uh, while as a working as a self-employed? What are the challenges, or is there any difference? Or like how do I
Okay.
what's the
You have
transition?
a
Yeah,
corporation.
Narendra. Yeah, I will rephrase this question. So,
Yeah.
Narendra, is contracting worth, okay, from a financial perspective, is contracting worth? What are the benefits of contracting when you compare towards FTE?
So basically, there are two legal entities when you open a corporation. One legal entity is obviously your corporation, and second legal entity is you yourself. So you play two role in the corporation. One is you are an owner of the company. Second role is you can also be an employee of the company. So, as an employee of the company, you can take salary. As an owner of the company, shareholder of the company, you can take money out as dividend. So, as I explained you earlier, the basic difference between dividend and salary is that in dividend there is no CPP, but on salary there is a CPP. To answer your question, doesn't matter, means it's your own company, you are owner of the company, you can decide whether you want to pay your employee, which is you yourself, as a salary or dividend. So if you decide to pay yourself as salary, obviously you can do that, nobody is going to stop you.
Yeah, but what are the pros and cons, Narendra? So, if he
So
withdraws
basically,
his salary,
if you are withdrawing a salary, so only pro this you have to monthly contribute whatever taxes are there, because when you are withdrawing salary, there will be CPP portion and there will be tax portion of this on the salary that you have to pay to CRA every month. But if you fail to pay that, then there will be interest and penalties. So basically, if you are planning to do payroll, most important thing is you should be in regular touch with your accountant, who should be guiding you in this process of regular payment of taxes. In dividend, there are no such requirements, right? At the end of year, you file your tax return. You say, okay, I have taken out $70,000. Let's declare it as dividend. So when you take it out as dividend, you file your personal tax return, you pay whatever taxes are there. So basically, that is the basic difference between dividend and salary. Mean, dividend you can do anytime. Only time you have to pay taxes is when you're filing your tax return. In salary, you have to be more punctual. You have to be more regular. More you have to handle more compliance issues. That is the basic difference. So if you are planning to do salary, I would suggest that you be in touch with your accountant on a regular basis.
Uh, yeah, I get that. So the only thing I was trying to ask is like, while I'm using the model as dividend, there is a portion in the file tax returns that shows that I have contributed a certain amount of CPP. So what kind of CPP is that then? Or because it's a mixture of salary and dividend that's shown. I'm
Yes,
just
yes.
trying to understand
On,
the
on
context.
your on your salary, CPP is there. On dividend, there is no CPP. So I am
Sorry.
not sure. I am not sure how your accountant is doing this. So whatever
Okay.
portion he is showing as salary, there will be a CPP on that.
Okay. All right. Got it.
yeah, so
Thanks.
basically, when you are doing the contracting, right? So I've been doing contracting for almost 5 years now, and I've been full timer for more than that. So when you are doing the contracting, you literally pay three types of taxes. One is a corporation tax, which is basically the company tax. Second one is the personal income tax. If you are taking a salary or a dividend out of the the company, we pay that. Then we pay the HST. So those are the three types of taxes. And is contracting worth? That is a that's a That's a totally different session. We had our session last year comparing full time versus contracting, because that is one of the most requested topic. So we will have a separate session on contracting versus full time, and we will be explaining the full time versus contracting from the tax perspective, or sorry, from the take home perspective, take home money. So compare like 100k full time versus 100k contracting, which one is better, or how much tax we will pay. All these things we will cover it in our second, oh sorry, next session, next to next session. So next session we'll be having a agile, but yeah, next to next session we'll try to cover it.
Sudhir, I have a quick question here because we mentioned the dividends. So, what is the deadline or timeline for declaring the dividends for the year of 2022?
You have to file your dividend. This is called slip called T5.
Yeah,
So that you have to file before 28th of February.
yeah. So basically, I can transfer the money from my corporation to personal as a dividend, even on like on 15th of January or before 20th of February. Am I correct? Or
No,
it should be
no.
before 31st
It's
of December.
dividend is for the previous year, right?
Yeah.
So if you have not miss, so you are saying that you want to withdraw 20,000 now and want to declare that as dividend for the previous year.
Yes.
You can do that,
Okay.
but
Before
let your
28th Feb.
accountant know that that
Yeah.
this was the whole purpose of doing this. So when he
Okay.
is preparing your corporation tax return, let
Hmm.
him know that please declare dividend of $20,000.
Got it. Thank you.
Okay, let's move on to Amit. Amit.
Hey, first of all, thank you, Sudhir and Narendra, for arranging this session. I have actually a couple of questions. First one is like when we first come to Canada as a student, right? So at that time, I don't think so that we have any RRSP contribution limit. So what if a person deposits something less than 2000 without knowing his limit, and after that he gets to know that the limit is nil, like zero, because we were students.
Just withdraw the money till $2,000. CRA is not going to charge you interest penalty.
Oh, okay. So if it is still sitting there because it's less
It
than
can it
2000,
can let it sit there. Don't
okay.
don't worry don't worry about that.
Right, so I know that each and every person has a different contribution idea in their head, but according to you, what is the average amount that is considered as a genuine contribution in RRSP, and it is not an over contribution that at the age of 65 we are getting a lot of tax on our RRSP contribution, so that there should be I guess there must be a figure that this is the target which everyone should keep in their mind, that at the age of 65 we should have this much in RRSP, and this is not a over contribution and this is not a less contribution. So do you have any idea about that?
You have asked a question which includes your investment planning, retirement planning, and everything.
Oh,
Yeah, that's what I
See,
was also wondering.
all situations are different.
Yeah.
Every individual has their own individual thing. So, say for example, you will have kids who will not support you in your retirement. Somebody will have kids who is ready to support you in retirement. One spouse is working, one spouse is not working. Every individual is different. Every individual planning is different. So there is no general answer to that.
got it. Yeah, I understand now
Only
because
thing what I advise everybody is contribute to RRSP at least to buy your first home, because that is the first place to start. You get some, means you have limit of $20,000. You contribute $20,000. You save $6,000 of refund. Now you are sitting on $26,000 of down payment. So what I suggest everybody that please, please, please contribute to your RRSP till the time at least you're buying your first home.
yeah. Thank you. So one last thing. You talked about first home savings plan, right? Which is going to come up in April. So I have a query. Suppose we open that account in April, and the limit is 8,000 per year, and we invest that in SMB 500, and we get like 10% return out of it, and we can only like pull out 40,000 in that uh, first home savings plan, right?
Yeah.
So what will happen to that interest which we
Whatever
gain?
whatever income you generated, you move that money to your RRSP account
Okay,
without
got
any
it.
tax implication.
Okay, cool. Thank you so much, guys.
Thank you, thank you. So we will have a hard stop at 8:30. So we'll ask the remaining question before that. In case you guys are in IT and is searching for job in Canada, we have two pages. One is Canada IT Club, and one is Get Hired in Canada. And we have a couple of WhatsApp groups also. So Get Hired in Canada, if you search in LinkedIn, that shares all the IT jobs which is coming in the Canadian market. So we share like whatever it's been posted in LinkedIn, we try to share it, just trying to consolidate it. And the same thing with the WhatsApp groups, we will try to share all the jobs in IT sector in WhatsApp. So in case you guys want to join there, please PM me. And then we have something called as a Canada IT Club, which is a kind of a platform for all the IT professionals in Canada to improve your professional network. We are just getting started with it. So we have few members right now. We will be having sessions in the upcoming weeks on that. Okay, so yeah, we'll move on to the next questions. Bhavik,
Yeah, hi.
yeah, you have any questions?
Yeah, I do have.
Yes,
So as
please.
you mentioned, for students, like we would be getting 15% return, right? So when would that be credited to us?
When you will start earning money, that
Like
time
we,
when so basically that, see, this credit is you can carry forward. So
like
you use this credits only when, say, down the line you start paying taxes, and
yeah, like,
those credits are sitting in your CRA account. So whenever you will file tax for that year, when you end up paying some taxes, that credit will be used and you will get refund out of that money.
yeah, like we are anyway working part time, so I would be filing taxes for now. So would I be getting in this year as well? Year itself?
Not much, not much. Maybe, but not much. What is your income, annual income?
Like I have been
Let
working
us,
with part
yeah,
time, like 20 hours a
yeah.
week.
Let us not
Any
share that. Take it offline, Bhavik.
Okay.
Okay, take it offline. Take it offline with Narendra. Do not share those information here. Let us take it offline.
Yeah, that's
I'll yeah, I'll share Narendra's contact with you.
okay. And
Okay,
what else? Yeah. Okay. Like I have a general question. Like, what else can we claim? Like the other things, like I brought like a laptop, like a car. So can we claim any tax returns on them? Like,
no,
no.
no.
Oh. And also, like, is there any welcome Canada offer? Like,
There is nothing called welcome to Canada. I don't know who has floated this concept. I get lot of inquiries about this welcome to Canada. So
yeah, like,
basically, when you land in Canada, every individual is eligible to get Ontario Trillium benefit and HST benefit. So these are based on your income and
okay,
the rent that you pay for your home, provided you have a rent receipt. So when you
okay,
provide all this information to your accountant, CRA will enroll you for, means you have to enroll for these accounts, HST, Ontario Trillium, and this climate incentive you automatically get when you file your tax return. So combination of these three, people will start getting. Now there are a lot of people who have misinterpreted this as welcome to Canada. It's not welcome to Canada. Or everybody is getting that. Any new
yeah,
Canadian will also get. But people who
okay,
are filing their taxes, they say this thing welcome to Canada, and it's sometimes it's very irritating because a lot of people ask this question
yeah,
during the exam.
yeah.
There is nothing, means every you will get it. If you're filing your tax return, you will get your HST credits, you will get your climate incentive, you will get your Ontario Trillium benefit. everything everybody will get. So it's not welcome to Canada. It's normal thing that every Canadian gets.
Okay, okay, great to know.
Okay.
Thank you.
Thank you, Bhavik. Yeah, so we are at time right now. See, you just a couple of things. In case you guys want to go with an accountant, I would strongly recommend Narendra because he have been helping me for the past 4 years. So I know him. The reason why I'm saying is because do not share these things in the public forum. So if you have to file a tax, or if you are especially contracting, a lot of people get into trouble because they don't know how to run it. They do the damage and then they go to an accountant to save. That's not how contracting works. You literally will have to plan in advance how much is going to be your income, how much taxes you will pay, and how much you will be able to save at the start of the year. So for that you need to have an accountant. So I would strongly say recommend everyone to reach out to an accountant to get started when you are going for a contracting. And so sorry that we like few more people are there to ask the question, but unfortunately we are at time. We will not be able to continue with this because we have other appointments. It's just 1 hour. I have asked for Narendra, but feel free to reach out to him. His contact details are provided in the LinkedIn. Or if you need any help, you can reach out to me also. I'll share Narendra's number. So again, Narendra, thanks a lot for coming and sharing all these information with us. This was a great session. And any closing words, Narendra?
No, thank you for inviting me. And I wish all the people who are new to Canada good luck. Find a good accountant and start saving for your first home. It's life is good provided you plan it properly. And if you need any help, just let me know or let Sudhir know. He can give my contact information.
Sure. Thank you, Narendra.
Thanks,
Thanks,
thanks a
everyone.
lot, Sudhir, for
Yeah.
inviting.
Yeah, thank you. Thanks a lot. So we are having another session next Thursday, probably. That might be an agile. There are a couple of topics which are in discussion. So similarly, in case you guys want to have some topics with a hiring manager, recruiter, or a anyone, just please try to PM me. I have some contacts. I'll try to arrange the sessions in public forums. Thanks a lot. Thanks everyone, and have a good night. Talk to you soon. Bye.
Thank
Bye.
you.
Thank you.